Financial markets in turmoil.
What are the root causes of the financial crisis?
The dollar losing value.
Heading for its biggest loss in nearly 3 decades.
Will Social Security even be there?
I don't know.
Buy or rent?
That's a very good question.
Interest rates.
I'm not so sure.
Where do you put your money?
I don't know.
Welcome to the show that answers your questions. This is Follow the Money Weekly with your host, economist, and best-selling author. Here's Jerry Robinson.
Friends, welcome to this week's edition of Follow the Money Weekly. So glad that you're joining us all around the world. FTMdaily.com on the web. That is FTMdaily.com on the web. So glad that you're joining us today. We have a special program for you lined up today. We're going to be interviewing a good friend of ours, longtime friend of the show, John Rubino. He is the editor of dollarcollapse.com. One of the leading websites in the world on what is happening in the global economy and tracking the dollar, news on gold, news on silver, the whole 9 yards. Great source of information. Good friend of the show, John Rubino, will be joining us. We're going to be talking about the U.S. dollar, why it became so strong in July last year, and whether that strength will continue or wane in the coming weeks. Additionally, John and I will talk about the Eurozone, oil prices. We'll have an interesting discussion on the Middle East, and then also we'll talk about something very interesting, the growth of the global solar energy industry and why solar stocks may be one of the best investments over the course of the next several decades. And John will break down some of the statistics and explain why the investment may be such a good opportunity. But before we bring on John Rubino, I want to bring on first our good friend Tom Cloud, Precious Metals Advisor. He's here to give us an update on gold, silver, palladium, platinum, diamonds, the whole 9 yards, the dollar. We're also going to be talking about some of the things happening in China right now. And we're going to be doing an interview this time. Normally we bring on Tom and he does his normal precious metals market update. Today we're going to be doing it interview style. So without further ado, let's head over to that right now.
Follow the Money Weekly presents your precious metals market update. Here's Tom Cloud.
All right, Jerry. Well, it's been a while since we've done one of these question and answer sessions. Looking forward to it and hope everything's going well with the new baby.
Oh, thank you so much, Tom. I appreciate that. Yeah, we love having your weekly updates on the program, and I know it's a highlight for many of our listeners, and really want to tell you how much I appreciate all your insights every single week. I know our listeners greatly appreciate your vast knowledge in the precious metals markets. So many things are changing right now. Of course, gold and silver have been kind of non-stories for many market participants over the last year, maybe even the last couple of years, as there's been so much pressure on them, especially since the dollar took off last July. However, we're beginning to see now, as you and I both have been talking about, that dollar eventually is going to top out. It looks like maybe it has. There's no way to know for sure, but it looks like it's really beginning to get some downward pressure on it. And that, of course, is now moving towards gold and silver. We're seeing that trend now, gold and silver, even some other commodities that are priced in dollars beginning to get some relief. You think this is really just a relief rally that we're seeing right now in gold? Is it just relief because of the dollar, or do you think there's something else afoot here?
Well, there's a lot of things afoot that we've talked about on the show, all the stuff going on in China with the new China trading platform starting April 15th on real time, 23 hours a day, where the spot price will be set in the future, and that's, real exciting. But when you get a 3.2% sell-off in the dollar in 10 trading days, you do have to look to see if it's going to rally back, and I'm not quite ready to say that, the bull market in the dollar is over. It could go back up near 100 one more time as it sits, at 96.5 roughly, and but it is interesting that the whole time the dollar's gyrating, we've noticed for 3 straight months that Russia, China, and Japan have all been net sellers of the U.S. Treasuries, and this hasn't happened in years. So we're starting to see them liquidate without trying to hurt the dollar too much, but they're in a full thing now, 3 months in a row. I haven't seen the figures yet for March to see if there were more again. But so it is interesting to see these people moving out. As we've talked about for a year or two, everything is shifting to China, and certainly no better evidence than the new AIIB and the new CIPS SWIFT system, with over 60% of the world's currency flow now going to go through CIPS starting as early as September, October. So Yeah, I mean, it's like we've watching the dollar deteriorate, and people don't do it. And then the last thing to mention here in the opening remarks is you can see it, Jerry, in the amount. We've seen gold up through today, April the 7th, 2.67% since January the 1st. Silver's up 8.9%, and the stock market's up 2/3%. So gold's up 4 times what the stock market's up this year, and yet if you picked up the paper, any paper, you'd think the stock market was going through the roof and the gold market was going through the floor.
Yeah, the mainstream always dogs gold. And the same thing with China. You know, they have been downplaying China here in the United States for some time. We've been talking about this on the program now for a while, that investors really need to keep their eyes open to China. We're seeing a massive move towards this, and it's not new. It's not like suddenly now China's on the stage. I mean, this has been a long time coming, and they have been working on this for decades. I'm reading a very interesting book right now, Tom. It's called The 100-Year Marathon, and it's written by Michael Pillsbury, who was one of the top officials here in the United States to China. And he is just providing so much information in this book about how the Chinese have really deceived the United States. It's a really great foreign policy failure on our part because we have not really understood fully how ambitious China is. And we see this new China International Payment System that's been kicked off, as you mentioned, of course, the Asian Infrastructure Investment Bank, both of these indicating to the world that China wants dominance. And of course, they're downplaying it. They're not saying that that's exactly what they want, but they are certainly moving in that direction. And I think that's something to think about with gold investors. What does China mean to gold investors? We always think about the dollar collapsing, and of course, that would be good for gold. But what does a dominant China mean for gold, Tom? As we go out a decade or two, what does that mean?
Well, the dominant thing for gold is just that we got new geological figures last week in the study released that at current consumption, silver has less than 4 years silver left on the planet Earth, and gold about 20 years at current consumption. So when you look at 20 years out, we think of that as long term in America, but in China, like you said, they've been planning for decades, and they know that based on history that no currency has ever gone off a gold standard and survived. They were the first ones to start talking about the dollar in its last years. I remember as late as 7 years ago, and maybe a lot longer than that, they were talking about replacing the dollar. But when you have a country that is 4.25 times bigger, they're over there with 1.4 billion people. We're over here with a little over 300 million people, and they're encouraging their citizens to buy gold and to hold, and they're running billboards showing they're going to a no new gold currency. And we sit over here and act like we just kind of yawn, like we don't have the greatest opportunity ever. I mean, to sit there and buy gold today, and looking back on it in my opinion, less than a year, we're going to see prices right now that we won't see again probably in our lifetime. And when they do reset a currency over there, whether it's the yuan or the renminbi, you will see price set much higher. And we think right now the accumulation period, they're not in any hurry, just like you said, because all they're doing is accumulating gold. We're getting the figures on how much is imported from Hong Kong, but we're not getting all the figures on what they're mining. They have the most gold in the world, and we're not getting that because the government's actually functioning as the miner, the refiner, and the owner. And they're just piling up that, and that gold is not reported in the figures that we see, the tonnage that's being brought in from Hong Kong monthly. So they're training their citizens right because they know, as I know and you know, and a lot of our listeners know, the dollar is on borrowed time based on the history of civilization, and any time a currency's gone off of a gold standard, the average year is 30-something years, and we've been off the gold standard since 71. So, we're 44 years into this, and like I said, we're in the last days, which could mean months. It could be a year or two. I can't tell you that for sure, but now's the time people need to be thinking about where they want their portfolio and what's going to profit from not only the $1.4 billion in China, but how about the $300 or $400 million in India also, and their citizens are buying gold, and the tax now has been dropped from 10 to 2%. So we should have a huge year in gold purchases in India.
You mentioned the China International Payment System, and I know we've also talked about the Asian Infrastructure Investment Bank. There's so many different things that are happening right now. We've had a chance on the program in the past, Tom, to delve into the AIIB. We have not talked too much, myself specifically, have not talked too much about the CIPS. Why don't you break that down real quickly for our audience, some of those who are new to that, and tell us what that is and what it means for the U.S. dollar?
Well, what it means is, number one, the money's not going to flow. Like right now, everything is settled in U.S. dollars. So think about it this way. If I'm running my company, if I had billions and billions of dollars coming through my watch every day, it's kind of like a Ponzi scheme, if you will. You always got money coming in, so they could actually use that money sitting there as collateral or to buy things, knowing that there was never, even though they owed the money, there was so much coming in, there'd never be a time where they would need to pay it back. There's no telling what's been accumulated by the banksters, as we call them, international bankers, with other people's money we've always heard about. So number one, there are asset after asset that's been bought by the banksters with money that's just flowing through here to stay a day or two. And the other thing is, and the worst, has been the derivative leverage. I mean, the derivative leverage that when billions of dollars are flowing through and you can use that money, the banks can, the central banks go out and leverage these situations where you hear about the trillions and trillions of dollars of derivatives out there that don't exist. They're all a mirage. So what will happen is it will stop the U.S. It'll cut our ability, or the banksters' ability, dramatically, because they'll have about anywhere from 50 to 70% less money flowing through as they go through the CIPS. And then the AIIB that we've talked about, it's going to really get into helping the third world and doing the way it will rival the World Bank and every other institution out there, because this thing on the peripheral, the way it looks now, is being set up to do what we were supposed to be doing, but not doing. We were taking care of the banksters and letting these derivatives grow at an astronomical amount. So this is going to be shattering for the dollar. I mean, it won't be long to people are dumping the dollar and U.S. Treasuries. Interest rates will get forced up, and we talked about last week when you're looking at $18 trillion of debt, currently paying $256 billion a year in interest, and the debt's growing $1 trillion a year. Just look at the debt ceiling, plus interest rates going up. They're estimating that within 8 years, we'll have about $900 billion in interest payment. So we know things have got to crack. We know things can't keep doing that. We know the dollar has got to spiral down. I mean, it's plain and simple.
I'm looking here at charts, Tom, of gold, silver, and platinum, and all of them obviously bouncing as the dollar began to come down right in the middle of May, almost on cue. The only odd man out was palladium. Palladium kept falling, but at the very end of March, it just spiked higher really, really dramatically, almost parabolically. What happened with palladium over the last week to cause it to bump?
Crazy, Jerry, as the Federal Reserve. I mean, Federal Reserve moves markets for 18 months by saying they're going to raise rates, and they cry wolf. They never raise rates. The only people make money are the day traders. You know, they go in there, and palladium's kind of the same way. One day you think we need quantitative easing and the economy is slowing and numbers come out from the U.S. and abroad, and it looks like there's no way to do it, so palladium takes a dive down, and then you come back out and you hear these economic figures are better and more jobs are created like the next month, and then car sales perk up and people need palladium for the catalytic converter, its main usage. And what used not to be the main driver but has become for palladium based on the export figures is China, with their new 8 car factories over the past 38 months, is now the biggest importer of palladium. Surprise, surprise. Just like every other commodity, gold, silver, and now palladium and coal. They're now the number one importer of low coking coal from the United States. So this is what we're seeing with palladium. It's kind of moving around when people think the Federal Reserve is going to raise rates, palladium goes down, and when people think there may be another round of quantitative easing, palladium goes up based on the world economy hanging on and still growing and car sales expanding.
That makes total sense. The Fed chairman of New York, Dudley, made the comment last week or this week that things aren't looking so well for a rate hike as early as they had anticipated. Of course, we saw those shocking job numbers on Friday for March showing that we were way under estimates on how many jobs we would have created for the month of March. What do you think about a rate hike in 2015? I know you don't have a crystal ball, but are you in the camp that says no way, it's not going to happen this year?
That's what I'm saying. I'm still in the camp. I never say no way, but certainly I'm leaning. If I had to bet $1,000, I would bet on there'll be no rate hike this year. I just don't see any way people can do this. And we've even got people out there now, David Stockman that was in the government, and Paul Craig Roberts, and others just flat saying there's not an honest weight and measure in this country anymore. There's no figure that comes out. It's just like the debt ceiling. Debt ceiling gets raised from 17 to 18 trillion by Obama last year, and he's already done it. And then he comes out and goes on TV and says, well, we cut the deficit down from $1.3 trillion because of Bush's shenanigans. I've now got it down to $700 billion. Well, how have you got it down to $700 billion when the debt ceiling's going up over $1 trillion a year? It's all, fancy bookkeeping is doing it, and that's what they're saying is the world sits and looks at it, but the American citizens don't want to hear bad news. They don't want to put pressure on the politicians to try to straighten this thing out, and that's where we are, unfortunately. That's just a bad situation.
Makes total sense that the Fed needs to continue the illusion and act as if they're going to raise rates this year, but you can begin to see cracks in the facade as the arguments begin to, kind of come out of the Fed. Well, maybe we shouldn't do it. I agree with you, Tom. I don't think we're going to see one this year. I think it's highly unusual. And if we do see one this year, I think it'll definitely put a tremendous amount of pressure on this rally and maybe even end it.
Yep.
If we want to continue this stock market rally, you're going to have to see these zero interest rates continue, or maybe even more quantitative easing. Can you imagine QE4, QE5, and what that would do to gold? And I think that's coming. Don't you think QE4 is around the corner?
Yeah, I do. I don't think it'll be this year, but I don't think there'll be a rate hike this year. I think as Obama gets into his last year trying to keep the Democrats in the White House, I don't think there's any question in my mind that there's going to be a round of QE, and it would not surprise me if they purposely raise the rate to take the pressure off of the Fed hollering wolf, and then a month or two or three later coming in and maybe not lowering the rate, but putting in a round of quantitative easing, all in ahead of the election next year, because they know that they don't have the House and the Senate, but they would like to keep the presidency. And certainly, based on polls out there, they've got a good chance of doing that.
I tell you, Tom, the only investments that I hold that I would never consider selling, at least when I say never, I mean there's always a time to sell, and you always know when that time is. And I don't see the time to sell precious metals at any time in the near future. It would be some time out, because this is a major, major bull run that we're going to be moving into. But the only two assets that I refuse to sell right now are precious metals and real estate. I'm holding on really strongly. But my stock portfolio, I recently told all of our folks here on the show, you may remember, that I was just getting out of all my buy and hold positions. All those positions that I was holding on to for the long haul for a quote-unquote retirement, I sold out. And now I'm simply moving into speculation. Myself and our insiders, our FTM insiders, we've been profiting from the rise in the Chinese stock market, which is completely outperforming the U.S. stock market, as well as the European stock market because of the QE that's going on over there. And we are really honing in right now on a major buy signal for gold and silver as well. I've been kind of dangling that in front of our subscribers now for some time, that this major, major buy signal is coming on gold. And the latest data we've been seeing come in is telling us that we're getting much closer to seeing that trigger that will, probably lead to an avalanche of demand that's been pent up, that wants to go back into gold, knows there's a fundamental reason for it to go up, but just doesn't want to put their money into it until the trend develops. And we are, of course, watching that trend very closely. We'll alert all of our FTM insiders as soon as we see that trend take effect, because I want to back up the truck and put a lot of money into gold and silver, especially the money that I've taken out of some of the buy and hold strategies that I've been using with the stock market. So gold, silver, palladium, platinum. Tom, you also focus on diamonds. We don't talk about that too much. What about people out there who say, I might want to invest in diamonds as well? What can you do for them?
Well, interesting, just to throw one other thing, with the diamonds, got the figures came out the same as gold and silver. Say there's about 15 years of major diamonds left in the world, and they will be depleted from the Earth's crust. So we're talking about something that continues to wait. And I don't think the huge rush is going to come to diamonds until this Obamacare thing about the inheritance tax coming back to 55% at $5 million. That seems to be the people that are really interested in diamonds for confidentiality and portability. But I think I may have mentioned this a few weeks ago. I was working on a $125,000 portfolio for a client. And, it's not like you call 3 wholesalers in the gold and silver to see who'll give you the best deal. This is the thing that took me 3.5 weeks to get everything the way we wanted it. A lot of work, very hard to get. We're still buying out of Tel Aviv, where the best cutting on the colored diamonds is. But all of a sudden, now the white diamonds are back moving, and it seems like the last 3 weeks, every diamond sale we've had has been white diamonds, because they're now getting publicity a lot as the colored diamonds continue to give. The colored diamonds have definitely outperformed the white diamonds the last 3 or 4 years, but now it looks like that's changing, with figures out about the limited amount of diamond mines left in Russia, South Africa, and Australia, where a large percentage of all the diamonds come from.
It's so important to be spread out. That's what we've been teaching now for so many years, that you want to have some gold, you want to have some silver, you want to have some palladium and platinum, you want to have some diamonds, you want to have some real estate, you want to have some exposure to stock markets, maybe not the U.S. stock market, but some stock market. You want to have exposure spread out, and diamonds, as we've talked about in the past, represent something that's so easy to transport. They're very portable, and seems like the laws are pretty friendly towards diamond investment. How much does somebody need to have, Tom, to get started in investing in diamonds? What's that entry-level cost?
One yellow diamond, 3/4 of a carat, fancy or intense yellow, for $3,000 or so, or one of the most popular people for entry into diamonds recently has been, we're getting matching pairs of yellow half carats and make them into earrings. I've got a jeweler friend and that does it for me for his cost plus 15%, which is very, very cheap, and makes them into earrings. So we've got clients that are wearing around matching earrings. Not every day, but do it. And you could do that for about somewhere in the $4,000 range. If you go with a 1 carat, you want to spend at least $5,000. You go with a 1 carat.
I got it. All right. Well, for all those folks out there listening who want to give you a call, Tom, maybe they have a question about something that you've said. Also, some of them may have some money in an IRA or an old 401k, and maybe they want to put some of that in physical metal. Tell them how they can do that. How can they get a hold of you?
They need to call me. The 401k is real tricky. Most of them you have to get a loan, pay yourself back. But on the self-directed precious metals IRA, we'll walk them through one of the 2 custodians that we like and have used for many years, and show them how they can own physical precious metals in their IRA. We can walk them through that if they give us a call. And if they're still holding rare coins, certainly after seeing gold go from $250 to over $1,200, and the rare coin index has not even doubled in 15 years. And I think the big move, bullions, this next move is going to be much bigger and leave the rare coins way behind. So they need to get out of the rare coins and get into bullion coins, because by the time the fall comes, Jerry, with the people reading the Shemitah and people looking for a stock market crash, rotation from bond money and stock money into gold that we see, all this stuff is set up and looks like it's going to happen in the fall. Certainly nobody has a crystal ball, like you said earlier, but they can reach me if they have any questions, 800-247-2812, 800-247-2812, and they're not getting an email blast. Y'all should go to FTM Daily Precious Metals section and sign up, and we don't share our list with anybody, and we'll send out 2 or 3 emails a week keeping you updated on the markets and economic things that affect our market.
It's always great to have you on the program, Tom. Thanks so much for all your input. Appreciate it.
All right, Jerry, enjoy it.
Well, I rolling out Thomas, cried the whole night long. Well, I rolling out Thomas, cried the
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812. All right, joining me on the line today is my good friend John Rubino from dollarcollapse.com. John, great to have you today. How you doing?
Great, Jerry. Good to talk to you again.
Yeah, it's always good to talk to you. Fill us in. What are you focused on? What's the hot topic right now that you've been watching?
Well, the big thing that's going on right now is the effect of the strong dollar, I think, because basically we in the U.S., we started first with quantitative easing and generally the currency war scenario that all your listeners are familiar with now, where we weakened the value of the dollar coming out of the last crisis, and we pumped a lot of money into the system. And so we generated relatively decent growth because our currency was weak and we were flooding the system with new money. And that came, of course, at the expense of our trading partners. And then they, Japan and Europe principally, needed to force down their currencies to avoid dropping into deflationary depressions. And so that's the same thing as saying they forced the value of the dollar up. And so now we're suffering under a too strong currency. And you're seeing that kind of across the board in the U.S., where most statistics now, most economic statistics are disappointing the projections. They're coming in lower than the economists expect. And the most recent one was this morning when the fourth quarter GDP came out at only 2.2%, which means we're not growing fast enough to escape from our ever-increasing debts. And this is potentially a huge crisis because if you're an over-indebted society, if you've borrowed too much money, garden variety recession becomes life-threatening, because if the economy stops growing for a while and corporate profits drop and then the stock market drops, which is all, that's all normal for a recession, your debts become even harder to handle. And there's a point at which that can kind of snowball and turn into a runaway debt-driven deflationary crash. And that's what we're desperately worried about. It almost happened in 2008, 2009. And in the intervening 5 years, we've taken on even more debt. We've increased the derivatives books at the big banks. And we've basically made all the same mistakes on a vastly bigger scale that almost blew us up in the past. So we can't afford to have a slowdown. So now we have to figure out what to do. Because the dollar is the world's strongest currency, and every other currency in the world almost is down versus the dollar, which means our exports are more expensive in every other market in the world, and our corporate profits are starting to decline. And so if that leads to a stock market correction here or a serious bear market, then the wealth effect of higher stock prices starts working in reverse and the economy slows even further. We're looking at that kind of a scenario in which, if it is taken to its logical conclusion, we have a crisis even worse than 2008. And so the people running the Federal Reserve right now, who have been talking about raising interest rates because the economy was growing quickly enough to tolerate higher interest rates, are having to backtrack. And they've already said, we're probably not going to do it this month, and probably not in June. And we've got some Fed talking heads now saying not till the end of the year, and basically it's never going to be able to happen. Or if it happens, if they try it one time, it will probably crater the market, and then they'll really have to backtrack and go to some kind of aggressive quantitative easing again. Only this will be, who knows what it'll be with interest rates already close to zero. We're in seriously uncharted territory now, but that's probably what they're looking at, some kind of a European-style now quantitative easing, where we join in with Japan and Europe and start flooding the U.S. system with even more dollars. So anyhow, the short answer is that chaos is coming. We don't really have a way out of this. It's painless, and so our choices are basically what kind of crazy stuff is going to happen. We can sort of kind of choose which crazy scenario we're going to live through in the next few years, but we can't avoid hard times and craziness and some kind of really serious reckoning for all the problems that we've created by our bad policies and serious mistakes in the past.
There are just some real fundamental things here that you've nailed down. You've nailed down the fact that there's no painless way out of this. I mean, there's really no way out of this. You go back to the 1980s and you see the pop in the dollar. Aside from the little 90s pop that we had, the dollar's really been in this downtrend. But last July, it started this parabolic straight-up movement when you look at it on a chart. I mean, just straight up. And in fact, if you go back and analyze the dollar chart for, many, many years, you don't find that kind of parabolic rise really ever. What's behind this? We can say it's market fear and people are driving towards the dollar. Is it all because interest rates have been low and there's an anticipation of higher interest rates? Is that really what's behind this? Is it global fear? Where do you fall on that topic of what's driving this dollar demand currently?
Well, it's two things. One is that Europe and Japan had relatively strong currencies for a few years there, and that led to dramatic slowdowns in both of their economies. And so they've had to reverse course and aggressively liquefy, aggressively create new currency and toss it out into the banking system and push interest rates down to, in a lot of cases, negative territory right now. And so that has caused their currencies to go down, which is the same thing as saying that the dollar has gone up. The other thing is that the rest of the world is really a horrendous mess right now. Europe and Japan have the problems that we just talked about. China, after the 2008 crisis, embarked on a massive infrastructure spending program in which they borrowed like $15 trillion, which is about the size of the U.S. banking system. It's a huge amount of money for China, much bigger than their overall economy. And so now they're on the verge of a credit crisis. And of course, the Middle East, yada, yada, Latin America, there are problems all around the world. And so right now, the dollar is kind of the final safe haven in terms of major currencies. So capital from around the world is flowing into the U.S., not because they have very much faith in us, but because they have even less faith in whatever government they happen to be living under. If you're in China, you definitely want to get some money out of the country because you see the overbuilding that happened in the ghost cities, and you know how corrupt a lot of the local governments are, and so it makes sense to move some money to Canada, for instance, or to the U.S. And you're seeing that. Chinese millionaires are bailing on their country by the tens of thousands. And Europe, the Eurozone, is in serious danger of spinning out of control here, beginning with Greece, but then with Italy and Spain and Portugal soon to follow. There's a 50-50 chance that the common currency breaks apart in the next few years.
You really think that could happen? You really think the currency itself in Europe could disintegrate?
Well, they have some hard choices to make. And basically, the euro was set up with some fatal flaws, which I think they saw and they intended to use the ensuing crisis to fix. But basically, they've got a system where these countries live under the same monetary regime. They use the same currency, but they have separate budgets. And because of cultural differences in these countries, they're having a lot of trouble harmonizing their budget policies. And so the primarily Mediterranean countries like Spain and Greece and Portugal really can't live under the same kind of monetary regime that suits Germany. Meanwhile, France is just a general mess, and they can't get their act together financially either. And so the question becomes, is Germany going to guarantee all the debt of all these profligate countries that it's now in bed with, which will basically blow up its balance sheet? In other words, if it's on the hook for Italian debt, then Germany isn't such a good credit after all. But that's probably the only solution to this that holds the Eurozone together, because otherwise the peripheral countries have to live under austerity in order to adopt Germanic principles of thrift and efficiency. And that means that youth unemployment is going to stay really high. In Greece it's 50%. Half the young adults in Greece don't have jobs. In Italy, they have the highest percentage of young adults still living at home of any country in the world. And this isn't the kind of thing that you can maintain in a democratic society, because eventually somebody gets voted into office who's opposed to the Eurozone and says, look, we don't have to live like this. We can go back to the lira or the drachma or the peseta, and we devalue that currency, and then we go back to the old way of doing things, which, remember, 10 years ago, it was much better back then. And that's happening in Europe right now. The anti-Eurozone parties are gaining strength in public opinion polls and local elections. And in Greece already, Syriza, which is a quasi-socialist party that's opposed to austerity, just got elected. They were a fringe party just a few years ago, and now they're running the government. And in Spain, there's a country called Podemos, which is also radical left and would also probably take Spain out of the Eurozone if it could, and they're leading local polling. And in France, the National Front, which is a right-wing party, but also anti-Eurozone, is leading a lot of public opinion polls. So we're going to see a lot of electoral turmoil in Europe, which could possibly break the Eurozone apart. And at least it's going to cause a lot of stress, because this is going to unfold over years, during which the Eurozone is going to be an uncertain project. It's not going to be clear that it's going to hold together. And so under those circumstances, do you want to leave your money in an Italian bank or a Greek bank, knowing that it's possible that those euros are going to be converted to lira or whatever at a 50% discount at some time in the future? Well, of course you don't want to do that. So you move your money into a German bank, because then if it's converted into Deutschmarks again, they'll be revalued. They will go up in value. Or you move your money into the U.S. As big a mess as we are, we're still going to continue to use dollars for the foreseeable future. So you sort of have that certainty about what kind of currency your savings will be denominated in the future. Or you buy a London penthouse because the government can't make any more London penthouses, or a Miami condo if you're in Latin America. Huge amounts of money are flowing out of Latin American countries that are also uncertain into Miami real estate. Not because those people want to live in Miami, but because that's a way of putting money into something that has tangible value and probably won't be confiscated or inflated away by the government. So you're seeing that process work out all around the world, where everybody has their own local reasons to worry, and they look at the U.S. and see it as a relative safe haven. So this could go on for a while. If there's a big crisis somewhere out there in the world, like for instance this Middle Eastern war that is beginning between Saudi Arabia and Iran over Yemen, for instance, if that turns into something bigger, then even more money flows into the dollar. And then it's not about valuation or the price of this or that asset. It's just, let me get out of my country.
Just the fear factor.
Money in the U.S. I don't care what it costs me or what it yields or anything. I'm going to worry about return of capital rather than return on capital.
Let's dwell on that for a minute, John. Let's talk about oil in particular, because what we've seen in Yemen, and you've correctly put your finger on it, this is a Saudi/Iran proxy war, no doubt about it. It's interesting timing. It's very, very interesting timing. Here you have President Barack Obama, the White House talking about, and the State Department talking about possibly a deal being cut with Iran by Sunday. And lo and behold, a week before that happens, after Netanyahu made his last-ditch effort to try to get the president to turn his way on Iran, didn't work. Now the Saudis are out there in Yemen dropping bombs. And then the very first headline that comes out, John, is the Saudis are saying, oh, look, the Iranians are supporting the Houthi rebels in Yemen. In essence, forcing the White House to have to deal with the fact that Iran is fighting back against Saudi Arabia, which is an ally. So it puts the White House in this tremendous pinch as it's trying to come out with this good news about a deal with Iran. So it's a very interesting time, and I am a little bit concerned about this issue in Yemen, especially with the strategic oil choke point there that they sit on. Let's talk about oil here, because I'm looking at oil. It's really been been beaten down, and I know that the excess supply is there, but just take a look at what's happening in the Middle East. I mean, you have U.S. Jerusalem tensions at a recent high, I mean, maybe an all-time high. I can't remember anything like this with Israel and the U.S. And then, of course, you see ISIS still running around through Syria and Iraq and other places. And then now you have Saudi Arabia dropping bombs on Yemen and Iran, obviously involved in this. What about oil prices? You think these things might pop here in 2015, or do you think that the oversupply, the glut, is going to continue to put downward pressure even amidst chaos in the Middle East?
Boy, oil is sort of the global economy in microcosm, in the sense that there are about 10 different cross currents right now, and any one of which could be important enough to move the price one direction or another, but you got them all out there at the same time, so it's impossible to know what's going to happen in that market. Basically, the really short version of the oil story is that, first of all, we had a slowdown in global growth just as huge amounts of new oil were hitting the market from new technologies in the U.S. and Canada. You know, we have tar sands and fracking and things like that, which are producing a lot of new oil at the same time that China's infrastructure build-out was slowing down, and Europe and Japan were growing more slowly, and oil demand was not as robust as it was thought to be. And so that pushed the price down of oil a bit. Then you have geopolitical tensions where the U.S. and Saudi Arabia worked together to push down the price of oil in order to punish Russia, who we're mad at for various reasons, and that has an effect. And so oil tanks. It fell much further than anybody expected, and production is not dropping commensurately. So we're building up huge stockpiles of oil where some estimates have us hitting the limit to domestic stockpiles in the U.S. in another month or two, where we literally don't have any place to put the oil we're producing. And so what happens then? You dump it at any price, right? And so that's the downside, or the downside risk of oil prices from here. And then meanwhile, you got the Middle East, which could blow up at any minute, you know, through our mismanagement and through the inherent tensions in the world of Islam right now. You know, they really need to have their reformation. They need to work out the role of religion in government and what kind of society they're going to have. You know, Europe went through that in the 1600s.
About 1,400 years into Christianity's existence, they kind of had a blowout. The Catholics and Protestants said, okay, enough, and they went to war. And it's similar, you know, about 1,400 years after the birth of Islam, you know, you're finally having this thing come to a major head. I agree with you. It seems like a lot of these things need to be dealt with at that level, and Washington just continues to butt in, just constantly making a big mess of everything that they're doing over there.
Yeah, our lack of understanding in the Middle East is epic. Because it does seem like everything we do, we have to take back and reverse out a few years later, because we help one group in the moment. They're against another enemy. You know, they're opposing somebody that we don't like. But then as soon as they get enough arms from us to be independent actors, they become our enemies. And so then we're fighting them. We're bombing our own weaponry, you know, or being shot at by our own guns. And this has happened over and over again since at least the 1950s, when we overthrew a democratically elected president in Iran.
Which Iran has not forgotten.
One of the most brutal secret police apparatuses that the world has ever seen, you know. And you can go further back than that to after World War I, when the Europeans basically just drew some arbitrary lines in the sand and designated different countries that contained, you know, part of one tribe and part of another tribe who don't like each other, you know, stuff like that, guaranteeing turmoil forever after. And it's just gone on and on ever since then. You know, we just don't know what we're doing there. And part of it is because we don't seem to understand the whole Sunni Shia thing, and the fact that they have to work this out before there can be stability there. They have to figure out what kind of world the Islamic world is going to be. And so the smartest thing that we could have ever done along the way, and that we could do now, is just to leave, you know, just wash our hands of the region and let them work out their stuff, and then come back when there's kind of a united front, you know, when there's actually somebody to talk to who speaks for the country in question and the religion and everything. And we can assume that the oil will continue to flow because that's their only product. You know, it's in nobody's interest in the Middle East to cut off the supply of oil, because that's their only their only source of cash. So we don't have to intervene and have military bases all over the Middle East in order to guarantee the supply of oil, because there's nowhere else for the oil to go but onto the global market. And
I always think of that Thomas Jefferson quote back in the 1800s whenever he said, it's like we have a wolf by the ears, referring to slavery. If we let it go, it's going to, we can't let it go. But if we hold it, it's immoral. And it's kind of the similar thing in the Middle East, as you pointed out. I mean, we did draw all these arbitrary lines in the sand. We told them that this is going to be the name of your new country. We funded the rise of dictators in these areas who will do our bidding. And so the Sunnis and the Shiites, at the ground level, have never really had the opportunity to have self-determination, even though we've told them, go ahead, get together, make it work. Well, we've pretty much intervened in such a way where they can never really have the kind of leader that they really want to have. And on top of that, if we leave, John, that China would be right there, right behind us to replace us, or, Europe. I mean, somebody else would be coming right in to fill the vacuum, which I guess those countries would love to see us leave. I'd love to see us leave, too. It's just one of those terrible dilemmas. You have the wolf by the ear, and if you let him go, you know what's going to happen. If you don't let him go, you know what's going to happen. It's a terrible dilemma.
It is, and that's how life works sometimes. If you make a really bad decision, then you find yourself in a situation where you don't have any happy choices. You can only accept the consequences of your bad decision or stay there and keep trying to fix it when it's essentially unfixable and you end up making even bigger mistakes. And that's where we are. We made mistakes originally, and we've continued to try to fix the consequences of our past mistakes, but in the process we've made even bigger and bigger mistakes. And now we're looking at a regional conflagration here where everything blows up at once, and it's mostly our fault. They probably would have worked things out by now if we weren't there. And, if China comes in or Russia comes in or whatever, they still have to do something with that oil. It's not like they can just sit on the oil and gain any advantage. They have to sell it in order to generate any cash from it. So, if China owned the Middle East, they would still be an oil exporting country, and they would still be selling it on the open market. And furthermore, if we hadn't invaded Iraq, for instance, and hadn't spent that $2 or $3 trillion or whatever the total is now, and had taken that money and used it to put, for instance, solar panels on every roof in the United States Sunbelt, or windmills off of our coasts, or whatever, if we'd used it to create an alternative renewable energy infrastructure, we wouldn't need their oil in the first place. So then, China and Russia can do whatever they want to with the oil over there, because it doesn't matter, because we don't need it. We could have done that. That's an alternative reality that is completely technologically possible and completely financially possible. But instead, we dumped that $2 or $3 trillion down this rat hole and have nothing to show for it. The Middle East is in worse shape now than it was before we invaded Iraq the second time. It's going to be in worse shape 5 years from now, after we get done intervening in this war and dumping another $1 trillion into it. So, I think the only real solution, and it's not a great solution, as you said, it brings with it a lot of potential risks and potential problems, but the only solution is to just cut our losses and get out of there.
My guest today is John Rubino, dollarcollapse.com on the web. You can find his website there. We'll be right back after this break.
Follow the money. We'll return.
The stock market can be a scary place, especially when volatility strikes. The best investors know that the only way to avoid losing their nest eggs in the next stock market collapse requires a system. Here at FTM Daily, we have created such a system, known simply as the Market Barometer. Our exclusive stock market indicator system warned investors just prior to the massive stock market crash of 2008, saving them thousands of dollars in potential market losses. Later, it issued a buy signal in 2009, allowing smart investors to get back into the market as prices marched higher. If you have money in the stock market, you need a time-tested system to help you avoid the worst downturns and alert you to the best upturns. The Market Barometer, created by Christian economist Jerry Robinson, is a simple red, yellow, and green light system. Anytime the stock market trend changes, you'll receive a simple alert by email. Now, when you subscribe, you will also receive instant login access to view our alert archives, as well as other special investing resources, including exclusive videos with veteran investor Jerry Robinson. Don't let the next market collapse catch you off guard. Get 1 year of access to our powerful market barometer system for only $49. Get more details and lock in this special low price today at marketbarometer.org. That's www.marketbarometer.org.
Hi friends, Jerry Robinson here. I want to tell you about our Christian Financial Advisor Network. The Christian Financial Advisor Network, or CFAN, is a network of faith-based financial planners that I created back in 2010. I personally select each of the advisors within the network, and we now have advisors covering 45 states. So whether you are needing help preparing for retirement or are just wanting the most competitive prices on life insurance, we have a faith-based advisor who can help you. Each of our faith-based advisors agree fully with the FTM Daily philosophy and our own 5 levels of financial freedom, and will help you take the next steps towards financial security. And best of all, the service is completely free. That's right, you will never have to pay to speak with one of our advisors or to simply ask a question. To get started, schedule a 100% free consultation with one of our advisors right now online by going to ftmdaily.com/CFAN. That's CFAN. ftmdaily.com/CFAN. Get retirement help and the best life insurance rates from like-minded professionals who are waiting to assist you by contacting the Christian Financial Advisor Network. Log on right now to ftmdaily.com/CFAN and get your financial questions answered today. Friends, let 2015 be the year that you begin your journey towards financial security for both you and your family. That's ftmdaily.com/CFAN. Welcome back to the program, friends. I'm joined by John Rubino from dollarcollapse.com. John, right before we went to break, you were talking about the Middle East and oil. And, I was thinking about also, you were talking about solar. There is such an interesting move we're seeing around the globe right now with a move towards solar. It's been building now for some time. I saw a recent report saying 2014 was the biggest year ever for solar energy and the development of the solar industry. I also saw that Beijing is closing all of its major coal plants by next year and is dramatically increasing its investments in solar at a pretty unanticipated rate. So we're really seeing this massive move towards solar and other renewable energy. That's something that you've been talking about now for some time. You've even written books on it, clean energy. Why don't you talk about the future of solar, and do you think coal is dead for good? I mean, do you think we'll see a rebound in coal and uranium, or do you think we're just on this brave new world where we're moving towards renewables?
Oh, the solar story is just fascinating, and I don't think very many people understand it yet because basically solar power has been around forever. Jimmy Carter, back in the 1970s, put solar panels on the White House roof, and it didn't really work. Solar panels were very expensive back then, and the power that it generated was orders of magnitude more expensive than what you could get by burning coal and shipping it via high power lines from the coal-fired power plant. But over the years, solar has gotten a little bit cheaper year after year, and in the last few years, its price has really plunged to the point where solar panels put on a roof generate electricity at a rate that's competitive with what is coming in from local utilities in something like 10 U.S. states right now, and it'll be another 10 or 15 states in the next few years. And that is huge. That just opens the floodgates. Because if you can generate electricity by putting solar panels on your roof and actually save money, actually pay less each month than your current utility bill, well, why wouldn't you do it? Everybody in the world would do that. And so around the world, you're seeing these countries like China, who have huge energy needs and horrendous pollution problems, adopting solar on a vast scale. India is doing the same thing. They're talking about something like solar power equivalent to 20 nuclear power plants in just the next few years. Japan, after its nuclear meltdown at Fukushima, is going back to adopting solar on a vast scale. And so those are the three biggest markets. They're bigger than the U.S. probably for solar, but the U.S. is a huge success story too. So solar has arrived. And going forward, there are a lot of new technologies coming into into this market that are going to make solar even cheaper. And so what's going to happen in the future is that the price of solar is going to drop to grid parity in more and more places and put downward pressure on fossil fuels. And so at some point, it's just going to squeeze coal completely off the market. Like right now in the U.S., already 1/3 of new power generating capacity that's coming online is solar. And solar is less than 1% of current total generating capacity. So that's a huge differential, you know, that 1/3 of the new capacity is solar. And that's with solar not being at grid parity in 40 states. So let its price continue to fall until it's in grid parity in 35 or 40 states, and cheaper, dramatically cheaper in some states than utility delivered electricity. And it's a revolution, you know, and there's no real end to this. Solar is going to continue to spread for at least the next 50 years. You know, the International Energy Agency now estimates or projects that solar will be the single biggest power source in 2050 in the world. And that's coming from 1% more or less of global generating capacity right now to something like 26% of a growing market by 2050. So that's a really long bull market for this technology. And not some radical breakthrough that lops 50% off the cost in a single year. And that could happen too, because you see all kinds of breakthroughs coming out of labs right now. Let one of them actually be marketable. And so then that accelerates the timetable. Maybe we get to, solar being the biggest power source by 2030 instead of 2050. Whatever. It's a huge bull market going forward, and a really interesting market for investors because of that, because it's just got growth to the horizon. So some of the companies in solar, the best solar players, are going to be huge winners. They're going to be the Googles and the Apples of the next 20 or 30 years. So the intellectual challenge is figuring out which ones of all the solar companies out there will be the ones that really shine.
Do you have any favorites, or do you have any ETFs even that you would like to, or that you're actually playing on that particular trend?
What I worry about right now is that we still got this financial crisis coming, right? And solar companies right now are somewhat high flyers. They're valued fairly richly in most cases because of this dramatic current growth. And I worry that solar stocks will get sucked down with everything else when we finally have this crisis. And whether the crisis comes this year or next year or 2 years from now is impossible to say, but we're clearly heading for some kind of a resolution of this dysfunctional financial system. And so to jump into solar stocks now might be premature, because in a general 30 or 40 or 50 or 60% market decline, solar stocks won't do well. They will be sold in order to raise cash to cover the margin debt on your really crappy stocks. And so they'll get sucked down with everything else. So, there's some brilliant solar companies out there, but I wouldn't want to name names just because that might lead people to buy them now and might cause some serious losses when the financial crisis really bites. But at the bottom, whenever we've really capitulated, and this financial system has been shown to be unworkable, and it's crashed, and the big banks have cratered, and government debt has been proven to be a Ponzi scheme, and all the rest of the things that have to happen, and we start to rebuild something sustainable from the rubble of the current financial system, then solar is going to be one of the technologies that leads the way out. So whenever that happens, whether it's 2020 or 2017 or whatever, that's impossible to say, but at some point, these things are just going to be phenomenal investments, these solar stocks. And so if we can play it right, if we can keep our powder dry till then, or time a bet against this financial system perfectly so we make a lot of money on the short side, or however it works out, if we have some money at the bottom, solar is going to be one of the things you want to jump into with both feet.
I can't agree more, John. We've been actually working on investing in solar here personally on our property. Been all kinds of reports coming out. The U.S. military now, all of their bases here domestically getting off of the U.S. electric grid. They see the writing on the wall. I mean, no doubt the cyber attacks are coming against the electric grid here in America. And one of the nice things about the solar is that it's a way to get off of that major power grid here in America. The main thing is that solar is one of those industries, as John is saying, that is virtually unstoppable. And if you can find really good companies within the industry, companies with low debt, companies with a good return on equity, companies with strong return on investment, good management, those are the kind of companies that I think could probably do really well in the future. John, before we let you go, I think most people know that you and I both were Ron Paul supporters back in 2012, 2008. And as we look on to the 2016 presidential election, it's, we kind of see a few things shaping up. We see on the Democratic side that Hillary Clinton pretty much been anointed by the mainstream press as likely the Democratic nominee, although she has a lot of baggage. And then on the right, you have all of these different names, including Rand Paul. What's your opinion of Rand Paul as a Ron Paul supporter? What do you think?
Well, I like a lot of what he says. I think he's really interesting because he comes at things from a libertarian standpoint a lot of the time. But having said that, he's also a beginner. This is, his fourth or fifth year in public office only. And so he's still working out his message. And so he still kind of stumbles because, you have to be careful when you come from a fairly pure ideological perspective that the things you say aren't taken out of context and aren't twisted in order to make you look like this either incredibly ignorant or incredibly unfeeling person, and that's the danger with libertarians. When you start saying, well, social programs are a bad idea, then, you want people to starve, and that's the trap he falls into sometimes, where he'll say things that he has to backtrack on. So I don't think he's quite ready for prime time, but I think he's a really interesting voice in this run, and I think this is where he builds a base for a future run in which he's a legitimate contender. And in the meantime, he's a really interesting guy to listen to. I think an election campaign with Rand Paul versus Elizabeth Warren, maybe next time around, will finally be fun. We'll finally have a campaign that's worth watching rather than, the ones that we've had lately where it's just two political hacks.
Yeah, it'll be real political fireworks, not these mainstream talking points.
Yeah.
That, remember in 2012, there was never even a mention of the Fed in any of the debates. I mean, the Federal Reserve never came up in any of the debates. It was unbelievable, and of course, in a Rand Paul, Elizabeth Warren, of course you would have the Fed, at least you would hope, coming up at least once or twice in a debate. Go ahead and break out your crystal ball. What do you think? Are we going to see a Bush-Clinton 2016 ticket? Is that what it's going to be? Bush versus
that, doesn't it?
Oh, I pray.
But that's kind of the way empires end, though, is with the same inbred corrupt families in charge and making ever bigger mistakes. So, we're adhering to the script pretty well of the Roman Empire and most other empires. So it shouldn't be a surprise that we see a Bush versus a Clinton in this next election. Next, they'll trot out a Kennedy probably, and then we'll know it's over.
All right, my guest today has been John Rubino, dollarcollapse.com. I encourage you to go check out his site if you haven't already. Keeps a really good watch on the news of what's happening about the dollar, the economy, gold and silver. Lots of good information over at dollarcollapse.com. John, great to have you as always.
Thanks, Jerry. Great talking to you.
All right, friends, well, that brings us to the end of our program. Thank you so much for choosing to allow us into your life each and every week right here on this broadcast. And as always, I leave you with this final word, this time, just a simple thought. Everything that has a beginning has an end. So forget the past, plan for the future, and enjoy the moment. Just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next Tuesday. Until then, God bless.
All of the information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise.